Hello friends, in the series on income tax cases, today we will discuss a very important case for the levy of penalty under section 271D. Section 271D penalty is imposed on the assessee for the violation of section 269 SS, and broadly section 269 SS prohibits the accepting of some amount in cash, and one of the specified transaction is that amount is being received in cash for the sale of the property. The issue before Delhi ITAT-E bench in the present case was that if the assessee receives some amount for the sale consideration of the property in cash but immediately deposits that amount into the bank account, so whether in that case where the assessing officer is not able to prove any intent on the part of the assessee to evade the tax, so whether in that case the penalty under section 271D is justified. This issue has been decided by Delhi ITAT-E bench in the case of Income Tax Officer Ward 11 Gurgaon versus Anita Devi, and the reference number of this case is ITA number 7768/Delhi/2025, and the date of the judgment is 17th June 2026. The facts of the case are like this. In the present case, the assessee has sold a property and the assessee has received rupees 75 lakh as part consideration for the sale of the property. But when the assessee received this part consideration in cash, the assessee immediately deposited that amount into the bank account of the assessee and has also considered the whole consideration for calculating the capital gain of the assessee. The penalty under section 271D was initiated on the assessee by show causing her that why the penalty under section 271D should not be imposed on the assessee. The assessee explained that the assessee do not have any intent to evade the tax. The assessee is an agriculturist having technical tax laws knowledge, and since the assessee has deposited all the amount in the bank account immediately and the amount received in cash is also mentioned in the sale deed, so the assessee has acted bona fidely and there is reasonable cause according to section 273B, and hence the penalty should not be imposed on the assessee. But the assessing officer imposed the penalty which was duly confirmed by the CIT appeal. When the matter came before the tribunal said that in the present case it is very clear that section 271B penalty is not mandatorily to be imposed if the assessee proves that there was reasonable cause. The tribunal said that there is no doubt that in the present case whatever the amount has been received by the assessee in cash, that amount has been deposited by the assessee into the bank account immediately. The amount received in cash is duly reflecting in the sale deed, and the revenue is not able to prove any contumacious conduct on the part of the assessee. And since the assessee is also an agriculturist which has limited knowledge of tax laws, so in the present case the facts are very clear that there was ignorance of law and the assessee has acted bona fidely. The tribunal said that in the present case there is no tax evasion, and the tribunal said that the purpose of introducing section 271D was to prohibit those transactions which have been done with the intent to evade the tax. Since in the present case there is no intent on the part of the assessee to evade the tax, so in that case the penalty under section 271D for the violation of section 269 SS is not justified. Friends, this case is very important because it just gives a message that one should try to avoid the receipt of cash as much as they can avoid it. Only in exceptional circumstances the cash should be received, because section 271D is very harsh. There may be circumstances that the assessee has incurred loss on the sale of the property, but because you have received the amount in cash, so penalty under section 271D can be imposed on you. At the end of this video, once again I am repeating the name of the case. The name of the case is Income Tax Officer, Ward 11, Gurgaon versus Anita Devi. And the reference of the case is ITAT-E number 7768/Delhi/2025. And the date of the judgment is 17th June 2026. Thank you, friends.